cool. Right. So that's recording. This is recording as well. Right, lovely. Okay. Okay, so folks, I think I do actually want to start with Sortec, okay? So Sortec was the most recent question that we were doing. So what I'm going to do is go back to Sortec. Yeah, I am. All right, clearly I have to zoom in because it looks very small. Even when I zoom in, it still looks small. Okay, maybe I could just do the current view. Auto rotate. Okay, cool. 1, 2, 3, 4, 5. Okay, cool. Let's do that. And what we'll do as well, right, so I'll send the question in the chat. This is the 2013 me question, I believe. Sorry, give me 1 sec. Wet my face. Well, what happened after? Is Gina. Okay. All right. Hey, good afternoon, Gina. How you doing? Yeah, hi there, Gil. Good to have you on. All right, cool. So let's just take the roll quickly. Just a second. Yeah. Okay, cool. So, sorry. Listen, no, I asked no. So Jada is here, right? Jaziri is here. Cassie is here. Kelsey is here. Logan is here. Nyla is here. Not seeing Paige yet. Sequoia, no, not yet. All right, cool. Valentino is here. Right. So I have 4 and 5 is 9. No. Okay. So okay, so let's just refamiliarize ourselves with the content in the question. So Sortec Credit Union has 1,500 members. On Jan 1, 2013, the following are some of the account balances on the books of Sortec. Okay, cool. So the question itself wanted us to do the capital section, but like I said, they didn't give us the value of the share capital. So I made up a value of 100, right? So That value, of course, like I said, I made it up. So what's going to happen now is that we're going to go through the balance sheet, the top side, the assets and the liabilities. And what's going to happen is we're going to actually find the true value of the share capital, because it'll be what we call the balancing figure, right? So not all balance sheets will necessarily be straightforward for you to just plug in figures and be like, okay, cool, we're good to go. Sometimes you're going to have to find missing things. Sometimes there are adjustments to take into consideration. Okay, so with that now, let's go down here, right? So again, we'll do this one kind of like a freebie, and we'll talk through some of the rest of the other ones as well, right? So of course we had it properly. Sawtech Credit Union, right? Statement of financial position as at 1 Jan 2013, sorry. Okay, who's that? Oh, look at this. There you go. Hey, good afternoon, Nessa. How are you doing? Good to have you on. Okay, cool. Right, yeah, so we're doing Sawtech, which is a question from the last time we were in class on Wednesday, and we're doing the full balance sheet, right? So the unappropriated profits, education fund, welfare fund is all in the capital section. The bank, first section we're doing is the non-current asset section, right? Okay, cool. All right, so bank, mortgage, interest, outstanding, mortgage, no. So net book value of equipment. Okay, cool. So we have some stuff there, right? So we have cost, we have depreciation, and we have net book value. Okay, cool. So loans to members due 2016, interest on loans, or interest outstanding on loans to members, stock of stationery supplies, telephone bill unpaid, interest income received. Okay, cool. So what we need to do is classify these things, but we need to look through and see what items here are non-current in nature. All right. So the first thing is Sawtech is a credit union. A credit union is a financial cooperative. What they do is they lend money, right? Now, whenever we think of lending money, we think of loans, and we automatically classify loans as liabilities. And in most cases, the non-current version, because loans are for multiple years, not just one. Sometimes, yes, you could get short-term loans, but most times they are for several years or repayable over several years. Hence, they are non-current. But that's from the perspective of the borrower. What about the perspective of the lender? The lender is the person who is lending the money, and that person has a reasonable expectation to receive repayment in the future. So it's like a long-term version of a debtor or an account receivable. And how do you normally classify debtors or accounts receivable? Current assets, right? So if now we're doing it on a non-current basis, a long-term loan from the lender's perspective is a non-current asset, right? So the loans to members being members of the cooperative, and the credit union is making the loans to the members, all right? So the loans to the members due 2016. Now, what's the current balance sheet date? 1 January 2030. So here's my question. Is 2016 more than or less than 1 year from the current balance sheet date? More than. So if these assets are due or repayable over longer than 1 year, will they be classified therefore as current or non-current? Non-current, right. So we're going to put that. So we're going to put loans to members due 2016. We're going to start there, right? Now, we're clearly not going to have any depreciation on these loans. They're going to be repaid, but that's not depreciation, right? So we're going to jump straight across here to the net book value. We're going to put 145, all right? So maybe these columns these headings weren't necessary in this particular case. Now, the interest outstanding on loans to members, that's interest payable to us. So if somebody was supposed to pay us but didn't, they clearly owe us money. Anytime anybody owes us money, how do we classify that? Asset or liability? Asset. If somebody owes us money, that's our asset. Now, the interest is usually payable every year. So this interest that's payable to us is due within the current year. Does that make it, therefore, a non-current item or a current item? Current. So it's not going to go in the non-current section. All right? Stock of stationery supplies. Current asset or non-current asset? Current asset. Telephone bill unpaid. If we have a telephone bill that we didn't pay, well, the telephone is an expense, and if it's unpaid, another word for unpaid is accrued. And if it's an accrued expense, it is a liability, and it is current in nature. Interest income received in advance. So So again, here we have interest owing to us. Here we have interest paid in advance. So one is an accrued revenue, which is an asset, and one is a prepaid revenue. So if prepaid is the opposite of accrued, and the accrued revenue is the asset, the prepaid revenue would be a liability. All right? Okay, here we have long-term investments in other cooperatives. Right, so an investment that the entity makes is an asset. You can have short-term and long-term investments. Short-term investments, therefore, are current assets, and long-term investments will be non-current assets. So it says here what? Long-term, right? Cooperatives. Okay, cool. Right, so we'll just go across to that last column. So 78,900. And then net book value, right, of equipment, right, 20,000. Okay, the other items below, a mortgage, right? A mortgage is a non-current liability. The interest outstanding on the mortgage as an accrued expense, which is owing, so that's a current liability. And then we have bank. So bank is a current asset, and then of course these things here are in the capital reserve section. All right. So we have the three non-current assets. We're going to total that. All right. So now we're going to go into the current asset section. Sorry, is it too small? No, it looks okay there. If it's too small, let me know. Right. All right, so for the current assets, right, so let's go back to the top. So we had interest outstanding, right, on the loans to members that were payable to us. So that's a current asset. Stock of stationery supplies, right, and bank. So just those three items. All right, so interest, hold on, the interest, so stock of stationery supplies, right, that is 4370, sorry. Then we have, interest on outstanding loans to members, clearly. All right, that's 2250. And then we have bank, right, sorry, just bank. So bank, 42,500. Okay, cool. So we're going to add those up, get a subtotal, and we're going to put current liabilities, right? So I'm doing the working capital version because your syllabus is specific about you'll know in that particular one, right? I prefer the net assets or assets equal to capital plus liabilities because to me those are the more intuitive versions of the balance sheet and the more consistent in the presentation, but they like you all to know this particular version, so let's show it. Right, so the telephone bill, so accrued expense, right, that was the 1350 for the telephone, right, interest, so prepaid interest income, right, or you could use interest income received in advance, right, long-term, no net book, mortgage, all right, so accrued interest, right, so accrued interest expense, sorry, I should put expense, right? Because this one could be accrued interest income. $2,000, right? Right, that's it. All right, telephone bill unpaid as accrued expense, prepaid income, right, that's right, okay, and then accrued interest, right. We add those up. I'm going to put that across here. Right, so current assets minus current liabilities gives us what we call the net working capital. Right, now let's maximize that so we could see a bit more of the full picture. We're going to add that figure to the 243.9 for the non-current assets. And then we're going to have the non-current current liabilities. Right, and that was the mortgage, right? So that was the mortgage of 90,000. So let's put that. Okay, and that will be our net assets. Net assets. Okay, so let's maximize that and take a look at it. I'll send a pic in the chat as well. Let's zoom out a little bit so it fits a little better. Yeah, okay, so one sec. Right, so now that's 197,660, right? So this is 282. So clearly, I mean, hold on, 197. Okay, cool. All right, yeah. So we could still kind of fix that. So I want to just copy. Actually, hold on. Is this piece I was gonna copy? Yeah. Just the values, right? Right, so that was the top half of the balance sheet there. So now we have the capital section. So the net assets have to be financed by something clearly, right? In other words, they have to be, we have to have paid for them somehow. And that will come from the share capital and the reserves, all right? So the reserves were given to us in the question, the members' welfare fund, the education fund, the unappropriated profits. This is total here, right? And then the total for share capital and reserves, right, has to be equal to net assets here. So therefore, there's a figure missing here that we have to figure out, all right? So let me zoom in a little bit more so I guess we could see a bit more easily. Right? So the net assets on top here, net assets is total assets minus total liabilities, right? So we have the share capital here and then the reserves. The reserves total to 132,860. The total share capital and reserves is 197,660. So how do we find share capital? Right? So if we have to take this and add it to that to get the 197,660, how do we move backwards to find this figure here? Subtract. Very good. So we'll take 197,660 minus 132,860, right? And get 64,800. Right? Now, if we wanted to see, so 64,800 divided by 1,500 is 43. So 43. So if we wanted to find the value per share, we'd have to divide the share capital value by the number of shares. Now, they didn't ask for that, but again, we could find that if we wanted. All right? Okay, so hold on. Let me take a picture of this bottom half of it, I guess. Right? Actually, oh crap, I was supposed to put the work in. My bad. Sorry. All right, I'll send over the picture. So 197,660 minus the 132,860. Sorry. Yeah. right. Okay, cool. Right, so as we could see here with cooperatives, right, we will have some slightly different non-current assets. If it's a financial cooperative, we'll have loans to members, right? That's when the cooperative itself is lending money to its members. So money lent on a long-term basis from the lender's perspective is a non-current asset, right? We're also seeing investments like long-term investments in other cooperatives. All right, so an investment again is money that we put into usually another entity in the hopes of getting a return on it, whether that return is the growth in the value of the investment or dividends received from those entities. So we expect some sort of return on the investment. And of course, the usual sort of non-current asset here, equipment, right? The usual kind of conventional one. Okay, current assets. So again, we had to look at the accrued interest income. That was a kind of new one there. So let's put some... a little extra color on it to make certain things stand out a bit more. Sorry, I'll put that one in blue because I want to put the mortgage and the mortgage interest in green. All right. Okay, any questions? Anybody, anything? All right, Google Meet, if you guys are good with that, just kindly give me a quick Genie chat. If you need me to re-explain anything, that's not a problem, let me know. All right, cool. All right, so we're seeing Cassie, Aisha, and Nyla saying stuff, so I'm not seeing Jada and Anissa saying anything. So let me know, all right, when you get a chance. All right, so again, that was kind of like the example. So what we're going to do, I'll give you one to do now, and we'll work through section by section. I'll have to give you guys some time to try some stuff, right? It can't just be watch. Sorry, one sec. Yeah, so like I was saying, so we're gonna go back to this one. Yeah, okay, cool. Yeah. You wanna get something from? Yeah, no problem, that's fine. Oh, crap. Okay, not visualize. Actually, current page, because then you have space to actually try. Hold on, the one the capital section only. Okay, no. All right, so I'll do current view again. Did I send it to print? I think I did. Right, what I'll do is I'll also send a picture of what's on the screen in the chat as well. Okay, so this is the 2015 May question, Flatlands Cane Farmers Cooperative, right? So they presented the following balances for the financial year ended 31 December 2014. Right, so building at costs, right? So the building, how do we classify building? Asset or liability? Asset, not current or non-current? Building is non-current, right? Also called a fixed asset, right? So non-current meaning it lasts longer than a year. Investment in veggie lands farmers cooperative. So we said investments are usually considered non-current. Okay. Ordinary share capital, undistributed surplus. So we won't worry about those two, right? Those are capital stuff. Long-term loans to members. So again, the farmers cooperative apparently could lend money to its members. And if it's a long-term loan, right? So remember, first of all, if the cooperative lends money to its members, that's an asset to the cooperative. That's money owed to them. And then if it's a long-term loan, it's a non-current asset. So we have 3 non-current assets. And we also have some depreciation on the building. So we're going to have to subtract that from the building, the cost of the building. Right, now the interest revenue outstanding from loans. So again, that's money owed to the cooperative. So that's going to be an asset. And usually interest is payable every year. So it's payable within a year. Therefore, that's a current asset as well. Equipment rental fees receivable. So apparently the cooperative is renting out equipment as well. And those fees are like a revenue. So that's also a revenue receivable. And a receivable amount of revenue is a current asset. We have inventories, also a current asset as well. All right, okay, cool. So let's get the non-current asset section going, right? So, hey Tammy, afternoon, how you doing? All right, hello friend. Yeah, how you doing? Right, so building at cost, investment in veggie lands, farmers cooperative, and the long-term loans to members, right? There's an echo. Okay. Probably need to turn the volume down a little bit. Where did it go? Around here? Right, so hold on. Actually, I'll adjust it on this side here. Yeah. Tammy, how are we sounding there now? Still echoey? Or it's a little better? Yeah, there will be a bit of like a reverb, yeah, because it's the room now. Although this is right here, it's still there's still a bit of a reverb going on, right? Right, so guys, you're heading up Flatlands Cane Farmers Cooperative. You could put balance sheet or statement of financial position, right? You're gonna head up non-current assets and you put in those 3 things: building, the building at cost. Of course, don't forget to subtract the depreciation from it. All right, the investment in veggie lands, farmers cooperative, and the long-term loans to members. Leon Calder from Cantar McQuattro. I'm guessing that's who got checking parang for you. Yeah, another song. Colander. Oh, the farmer's hat. Yeah. So I think everything on the screen should enable you to do the non-current assets section, any current assets. I'm not seeing any liabilities in the question, right? So what we'll do is we'll leave a line for liabilities, and we'll have to kind of work backwards and find it. Right now, this is the 2015 May, right? Okay, so May 20. Sorry, veggie lands and then flatlands. Okay, cool. So we kind of have the figure here for the share capital. Okay, cool. All right. Flatlands Cane Farmers Cooperative. Statement of financial position as at. Sorry, I forgot the date. 31st December 2014. Hold on, just now. Maybe we could do like a 180. So everything, does everything need to be visible? I don't feel like everything does. Anyhow. Minus the depreciation of 35,000. Right. Investment and long-term loans. I mean, you can put long-term loans to members. You can put investment in lands, farmers, cooperative. Right, so 45,000, no depreciation to speak of on that, and then loans 120, no depreciation there. Right, so we add the three of those things there, we add those as well. Oh, what's going on there? Right, that's weird. We'll add, going down, right, okay, cool, there you go. All right, so that's what we're looking like so far. Right, and then we have current assets. Right, so for the current assets, we have the interest revenue outstanding from loans, the equipment rental fees receivable, and inventory. So we just have three of those things. So let's plug them up inside of here. And then what you could do, you could shift that subtotal across under here and add it up to get total assets. Right, so yeah, they didn't give us any liabilities at all that I could see. If you all seen any liabilities, let me know. Right, I'm not seeing any. Right, now of course they didn't build the question to do a full balance sheet, but I am kind of repurposing it for that purpose. Fees. Accrued revenue as the interest revenue. Technically, it's okay, but we could put them as two line items. I mean, technically speaking, they're not exactly the same thing, right? One is rental fees receivable, one is interest revenue receivable. Both of them are revenues, you know. So you could add them together. Accounts ASAP to me. Yeah. Last class for the year, boy. All right, so here we'll put them together. All right, so the interest revenue and the equipment rental fees receivable. Right, now you can separate them if you want, that's not a problem. Okay, so now what's going to happen is when we add these together, we get 453. Okay, yeah, so this, yeah, so yeah, we're not going to be able to get any liabilities. Actually, yeah, sorry, I lie. Right, so 453. This is total assets. Right. What I'm going to do, I'm just going to copy and paste this stuff. So, finance by capital and liabilities. Share capital and liabilities. All right. Okay, so check it. So based on the top half of the balance sheet, the asset section, we have non-current assets totaling 380, the net book value thereof, and current assets totaling 73, for total assets of 453. All right. Now, when we add up the share capital and reserves, right? Give me 1 second. I want to just actually take out that extra line there and put a little line in. Right. When we add up these items here, right, we're going to notice that we only get 408,900, right? And that's total share capital and reserves. So total share capital and reserves, right? Now, the accounting equation is assets equal to capital plus liabilities, right? We can rearrange that to put assets minus liabilities equal to capital. So assets minus liabilities equal to capital. Right? So if they give you the assets and the capital, and you clearly need to find liabilities, we could actually rearrange it one more way. We could do assets minus capital equal to liabilities. Now, you will never present or see a balance sheet presented with capital being subtracted from assets. I know it's not that is a thing. But arithmetically, that is how you would find your liabilities. All right? So we could just put here, so liability, or you could even put total liabilities. And we do have a breakdown, right? So liabilities, total liabilities, right? So of course, to find that now, right? So yeah. So this is total share capital and liabilities, liabilities. Right. So we're missing a figure. We're missing this item here. And how will we find that? So how do we find what we have to add to 489 to get 453? How did we find the what you call it? The share capital here. What did we do? We took the total share capital and reserves, the net assets figure, and subtracted the reserves, right? So across here now, if we have total assets and you have the total capital, to find liabilities, we find the difference, right? Same thing, same logic. So 453, right, minus 408, 900. Right, so this is equal to 453 minus 408, 900. Right, so 441, sorry, 44,100. So I'll send a picture of this in the chat too. Jabari, we're going on Jabari. program is this here? We're doing PoA, Principles of Accounts. Is that what you're talking about? What subject or what I'm using to put the balance sheet up? That's just Microsoft Excel. Typing on, oh, this Excel. Yeah. All right, so that was Flatlands Cane Farmers Cooperative. So again, in this particular case, now again, they didn't, yeah, Excel is nice, yeah. They didn't actually ask us for a full balance sheet, but like I said, I was repurposing the question to facilitate practicing it. And as we know, in some cases, they don't give us all the information, so we have to know how to find what is missing given certain items. Helpful. Glad to hear you find it helpful. Oh, sorry. Yeah. Okay, so folks, we did I send up? Yeah, I think I sent a pick in the chat just now of that item. Okay, right. So we're gonna try our next one, and I'm gonna give you a little more time to try the stuff, right? Because I know I'm moving a little fast because I want to get to something specific, right? Okay, cool. So I think we're done with this entire PDF here. Yeah, that was appropriation, right? I still have one appropriation I definitely want to go through with you guys, right? Okay, right. So we're back with Delca, right? So Delca High School was one we did previously. So I will current page. All right. So okay, let me just get that printed out, and we will do the balance sheet here. It was 9 marks for it, right? So that's about half of the mark to the question. Just about, right? Clearly the appropriation account was the other half. Actually, no, the appropriation was 8. So 9 is 7. Okay, so they probably had a few little theory questions first. Okay, so let's just recap Delca real quick, right? Delca had 1,650 students who were all members of the high school cooperative. Each member purchased 10 shares at a cost of 10 per share. So that's 10 by 10 is 100. They multiply by it here, you get 165,000 for the value of share capital. Right, but we are looking at the information from the books as at 31 December 2015. All right, now we have cash in hand and at bank, that's clearly a current asset. Accounts payable, current liability. Investments in other cooperatives, that is a non-current asset. We have a non-current assets at cost, okay, so we'll look for depreciation if any. Statutory, so reserve fund, undistributed, and this is all 1 Jan 2015. So this would change based on the appropriation account. And I feel like we did the, hold on, let me check. Hold on, Delca is what year? 2016. So 2016. Yeah, we would have done the capital section, yeah. All right, so we did the appropriation account and the capital section. All right, so clearly what we want to be able to do is the assets and liabilities on top and see if we have any missing figures to somehow find. All right, so cash in hand and at bank, current asset, accounts payable, current liabilities, investments in other cooperatives and non-current assets are both non-current assets. Forget these 4 things here. All right, so to do that, to kind of help with that, let's actually put the break in the page right there. And we'll scroll up. Additional information, so inventory of unsold goods. right? So we have closing inventory, that's a current asset. General expenses of 554 were unpaid. So unpaid expenses are accrued expenses, that's a current liability. Interest due on investments. So the investments are, like I said, an asset, right? And the interest on the investments is a revenue for us. So if interest is due of this, that means that it is due to us. We are owed the interest. So that's a current asset, right? This item here was for the appropriation account, and the dividends were to be paid on member shares, right? So that dividends thing is also a current liability. Now it says it was supposed to be paid, were to be paid. So that's where we're going to encounter a little bit of pushback from some other people because the interpretation there can vary. All right. So how we will treat it is we will treat the dividends as a current liability, right? So I'll give you the dividends figure because we already have it, right? The dividends figure is 8250. All right, so I will actually put a little comment box there. All right, so 8250. Okay, so I want you guys to do up the assets and liabilities. Do we have any non-current? No, we don't have any non. Okay, so I'm also going to make sure to show working capital or net working capital if you prefer that particular phrasing, right? So what you're going to have is you're going to start off with your non-current assets, which is just these two items here, the non-current assets and the investments in other cooperatives. You're going to get a subtotal there, and you're going to have your current assets. So you have your inventory, your interest due, your cash in hand, right? Then you're going to have your current liabilities, your accounts payable, accrued expenses, and dividends owing. All right. So organize that. I'll give you like a 10-15 minutes if you need it. And I'm going to start putting it together as well. And we'll see how what we have as net assets compares to the capital section. And we're going to see if there's any difference, how do we account for it? I should use the next one. Call out. Okay. No. That's a result. Okay. Interesting. Okay. Yeah. So again, we're using the dividends as a current liability item. And I'll show you the alternative treatment after we do it that way initially. So I'll give you a couple minutes again, and I'll starting here. Okay, so let's start putting in some stuff here. So we are dealing with Delca High School. Right, okay, I'll do a fresh one. Oh, that's 220. Okay, maybe we could do like a 180. Maybe a 180. 170. Yeah, 170 is good. Cool. Okay, cool. So Delca High School. Statement of financial position as at 31 December 2015. Okay, cool. Okay, so sorry, yeah. So cost, accumulated depreciation on net book value. So non-current assets. Okay, so like we were saying, we have non-current assets, yeah. We have 40,000, and we have investments in other cooperatives. 183,430. Okay, cool. All right. Additional information. So we have no information on depreciation. I'm seeing any question. So then that becomes a non-consideration. We could ignore that for now. All right. So 0, 0. What is going on with this? Thanks. Right, now we have the current assets. Okay, so inventory of unsold goods. Cool, so that's, yeah. Inventory, sorry, 800. Interest, so yeah, accrued income. Accrued income, that's the interest due on the investments, so 7524, sorry. All right, cool. Surplus, okay, cool, right, so that, and then cash in hand and at bank. So cash in hand and at bank, 12050. Okay, cool, so we're gonna add those up. That's gonna give us total current assets. Right, now current liabilities, we have accounts payable. Accrued expenses, 554. And the dividends payable. So like I said, we'll treat it in this particular way for now, but I'll show you the alternative treatment. All right, so we're gonna pull that across. Okay, so let's get to subtracting, so we could see our net working capital. All right, so that's 9970. Sorry, one sec. Hey Nigel, good afternoon. Office. Some cash. Oh, okay. No? yeah. Okay, cool. Okay. Right. Okay, that's odd. Right, so that's net working capital. And then when we add it to that, so hold on, let's put that down. Did we have any non-current liabilities? No, we didn't have anything there. Okay, so that's right. So that figure, right, that we just got 233,400. That's our net assets. Okay, cool. Right, so Wait, did I cut off a piece of it? Oh, no, right. Okay, right. So we had the inventory, that investments due, this and that. Okay, good, right. So now what's going to happen is I'm going to just copy and paste. Oh, look at that. What's that figure there? 233.4? And what we got here? 233.4? So it balanced back without us having to do any extra fanciness. Okay, just give me 1 sec. Right. Okay, so this question was more well. Yeah, I think this one it did request a whole balance sheet, so yeah, that's why. No. Right. Okay, cool. Okay, so I'll do I'll send a second picture. Right, so this way, yeah, we were able to get the balance sheet to balance. Right, but as promised, I will show you the alternative treatment for the dividends payable. Right? Because they did say they were to be paid, eh? Okay. Now, the alternative to the putting the dividends here, the dividends payable as a current liability, right? What the alternative treatment? It says were to be paid, right, at a rate of 5%. So the majority of people, I think, would say, okay, look, when we calculate the dividends in the appropriation account and put them there, that doesn't mean they're paid right away, right? There's usually a time between declaring them and then paying them. However, some people will say, well, the question wasn't 100% clear, right? Again, if you look at it, it says were to be paid at a rate of this, right? So to me, that says, hey, look, that's just giving us the calculation, right? But somebody might say, hey, no, it says were to be paid at that rate, so they were supposed to be paid, as in you were supposed to pay them. So if you were supposed to pay them, what would happen is you would have to actually pay them, which means money's going to come out of your bank account, right? So if that's the case, 8250, sorry, right? If that's the case, we take them out of there, right? And if we take it out of bank, right, the bank figure goes down by 8250, and then if we pay it, we no longer owe it. So it wouldn't be in the current liability section. Right, so I will send this in the chat as well as the alternative solution to Delca High School balance sheet. Okay. So I'll give you a minute or two if anybody's copying stuff down. But if anybody has any questions, now is a good time to ask. Eh? All right. So now watching the time too. So I think after this actually I'll go to that last appropriation account, that last question there, to make sure we cover it, because I want to make sure we cover that question. It should have been in the last class, but I didn't manage the time properly. So let me just check outside real quick. All right. So with that now, I mean, we do have other, what you call it, balance sheet questions. But yeah, we could hold off on that for now. Because after Delca, Liontown, yeah, I was kind of bypassed Liontown. Well, there's a nice question. There's nothing wrong with it. Right, this is the one I want to definitely get, show you all how to do. Storecraft Cooperative, right? This is from 2016? No, 2017, right? Okay, 2017. Okay. So we'll go in a little bit more. So 180. All right. So they want us here in the first part. So the treasurer of Storecraft Cooperative presents the following information for the year ended 31st March 2016. Okay. Gross profit, honoraria to members. Now, this item is something we haven't seen before, right? The honoraria to members, remember like how they had directors' fees in limited companies? As a payment to the directors for lending their skills and expertise to the entity, to the limited company. But in the limited company context, directors' fees or directors' remuneration was an expense. It was not an appropriation, all right? Appropriations are paid out to shareholders, owners, or in this case, members. Now it says honoraria members. What an honoraria is, or honorarium, is amounts paid to members for their services when they work in the cooperative. So it can be thought of like a salary, but they are still being paid in their capacity as owners. Although they're acting as, I don't want to say employees, but they're acting as what's the word, boy? Custodian is not the right word. But it's something along those lines. Anyhow, but sorry, I have to pop outside just for 2 minutes. Hey, Nigel? Okay, I'll come in. Yeah. All right, okay, so just give me a minute or two. Okay, cool. Sorry, guys. Yeah. Right. The treasurer of Storecraft Cooperative presents the following information. Right. So, like I was saying, the honoraria is inability. Yeah, is an appropriation. Long story short. Now, what have they given us here? Hold on, wait. I didn't print this off for you guys. Sorry, my bad. Current page. Let's get 5 copies going. All right, so what we'll do is as I put it on the screen, you will also just kind of put it inside the little table here. You don't have to worry to head up in this particular case. Okay, guys. So let's put that on top, and this is 2017, right? Okay, cool. So let me just copy and paste the here. M17, sorry. Okay, so this is Storecraft Cooperative. Oops, sorry. Didn't mean to tap that, right? Let me copy and paste that real quick. 5E. Cool. Storecraft cooperative. Okay, cool. All right, so they want us to do the look at the instruction, the income and expenditure account for the year ended 31st March 2016. Right. So I'm pretty sure most of y'all here might not have ever seen that particular thing, as in what an income and expenditure account is. Remember how we said cooperatives are non-profit organizations? And because they are non-profit, they don't calculate profit. What they'll calculate is, yes, they'll have income, they'll have expenditure, but the difference, if it is positive, if they have more income than expenditure, they call it a surplus, which we've seen. If they have less, which we normally call a loss, they call it a deficit. But the account that is used to then calculate that is called the income and expenditure account. All right, so it's not called the income statement. It's close to it, but it's called an income and expenditure account. So we're going to head that up. So we're going to do Storecraft cooperative, right? Income and expenditure account, right? For the year ended 31 March 2016. Okay, right. So they start you off with gross profit. Okay, so that's what we're going to start with, right? So gross profit. All right, sorry, hold on. Income. We're going to head up income. All right, and then we're going to put in that income section gross profit. That's 40,000. Now let's take it. So gross profit. So this honoraria item, that is an appropriation. It does not go in the income and expenditure account. Right? Bank fees is an expense. Fees paid for training a member is an expense. Interest from investments, that's an income. So we actually have to add that here. Interest from investments. Right? So 6910. Right, so there was only two sets of income, and now we head up expenditure. Right, so we have the bank fees, and we have the, let's just call it training fees, right? So training fees. 1,100 and the 2,800. 1,120, right, okay, cool. And we're going to subtract that from the 46,910. That's going to give us 4310. And this is what we call the surplus of income over expenditure, right? Or actually, to be a bit simpler, that's just the current year's surplus. Now, we're a bit more familiar with that particular phrase in the current year's surplus. All right, so, I'm sorry. Right, so income, gross profit, interest from investments, expenditure, bank fees, training fees. Right? Hold on, just now, I want to check something real quick. Is this your syllabus? Right, okay. This is the section I wanted, right? Identify features, identify types of, outline advantages, various methods of raising capital, types of shares, journal entries to record issue of shares and debentures, dividends, appropriate profits between dividends and reserves. Okay, cool. So we know how to do that, right? Right, so prepare the final accounts of limited companies. Final accounts are income statement and balance sheet, right? Prepare the preparation of income statement showing distribution of surplus. This is basically an appropriation account, balance sheet, ratios, and receipts and payment accounts for non-profit. Right, so this question we're doing is 2017, but the syllabus you're currently working on is the 2019 syllabus, right? So you don't have to know how to do this income and expenditure item. right? But as you can see, it's not really hard, right? At this stage, you should know which items are income, which items are expenditure, and it's just that we're kind of putting them in particular places, right? One section for income, one section for expenditure, totaling them up and finding a difference, right? Now, after that, now that was only 4 marks, and I'm thinking you could see we have the 4 items there in the correct places, right? And we have little workings, etc., right? Now, thereafter, this is the part here which was actually pretty interesting / troublesome. The treasurer of Storecraft Cooperative knows that the Cooperative Act requires that 25% of profits must be transferred to a reserve funds account. Again, it's a non-profit entity, so this should be called surplus. The cooperative's bylaw, so the bylaws are like the kind of rules, regulations that the company the cooperative imposes on itself for its regulation, its running, that kind of stuff, right? Requires that 20% of profits after such transfer be shown as retained profits or retained earnings, or as we know, surplus carried forward, right? All other profits are to be paid out to members as dividends. So this is interesting. All right. Now, it says, based on the requirements above, prepare Storecraft Cooperative's income appropriation account, so the appropriation account for the year ended 31st March 2016. Now, this is 5 marks, so it can't have that many things, and it should not be that difficult. But based on the instructions above, or here, I'm going to show you my interpretation of what was supposed to be done, right? This is Storecraft Cooperative income appropriation account, right, for the year ended 31 March 2016. Oh, wait, I only 3 columns. Okay, so with the appropriation account, we usually start with the current year surplus, all right? Now, we have some things to take into consideration. We have the current year surplus. Above, we have some more information, right? We have the retained profits from last year, which is the surplus brought forward, right? We have the honoraria to members, which is also an appropriation item, right? So what I'm going to do is I'm going to actually just kind of pull this up a little bit. 1 sec. Okay, no. Oh, right, there you go. Right, okay. Retained profits from last year. Right, I'm going to go down here. Right, so we could see basically all the information except the honoraria. All right, so to start this off, we're going to start with the current year's surplus, right, which is 43,010. Okay. Now, the Cooperative Act requires that 25% of surplus be transferred to a reserve funds account, and that 20% of profits after such transfer be shown as retained profits. Okay. Retained earnings or surplus for the end of the surplus for the current year. Okay. And then all other profits are to be paid as members, to members as dividends. So check this. So we're going to put less appropriation. So we're assuming that the appropriations are made out of the current year's surplus, right? Now we have 3 sets of appropriations. We have the transfer to reserve funds, we have the honoraria to members, and we have dividends. This second point in the middle is not an appropriation. It tells us how much should be left as the retained profits or the surplus for the current year. Okay. So follow me on this, right? So we have the honor. Yeah, I think we're still there. Let me make sure the YouTube's still running. TikTok backup streams. Okay, good. Yeah, sorry. Current tripped off here. So just want to make sure everything was still kind of showing. Okay, all right. So honoraria to members. Right. So that one was easy. That was given to us 5,500. Right. Okay, we actually don't need anything from the top here again, so we can actually close that off. All right, cool. Right, now we also have transfer to reserve funds account. right? And that's 25% of this, right? That actually has a $1.50 or a 50 cents thing, right? And we have dividends, but we can't calculate dividends straight out. We have to work backwards because they didn't give us a percentage. They said all other profits are paid out as members, to members as dividends, right? So we have to kind of put a little pin in it there for a second, right? Right? So the surplus for the current year, I know it's very similar to this label on top of here. This should actually be like net income, but it's not net income, it's the surplus of income over expenditure. Okay, cool. Right, so the surplus here, it says the cooperatives bylaw requires that 20% of profits after the above transfer be shown as retained earnings. So check this, right? It's 20% of the profits after the above transfer, right? So it's 43,010 minus the 10,753 or 10,752 and 50 cents, whatever the case is. We're going to use whole numbers, all right? So that's equal to 0.2 multiplied by 0.75 by this, right? So we have $6,452 left, right? That's 20% of the profits after such transfer, all right? Which means the remainder, so the remainder that has to be subtracted, right, is dividends. So what that means is that we get to get this figure is actually the 43,010 minus the sum of these three things here, right? So that's equal to the 43,010 minus 5,500 plus 10,753 plus 6,452. Okay, cool. So that's this. Wait, hold on. Really? Right, so if we add up all this, right, let me just double check it, right? So if we take this minus the sum of these three things, we get, whoa, hold on, not minus, sorry. Yeah, right, so yeah. So some serious kind of inside out and backwards workings there, all kind of madness. That's not something I would expect at a CSEC level, to be honest, right? Okay. Sorry, wait. I did something wrong. Right, so this should actually come down here. And then we're supposed to have a total, right? So equal to the sum of these three things here, right? Right, so that's what I was saying. So if we took the 43,010 and we minus the 36,559, yeah. We get 6450. Okay, good, right. That's what I was saying. Philip. Right, and to that we have to add the retained profits from last year. So we're going to add the surplus brought forward from last year, which is 12,500, and that's the surplus carried forward to next year. Yeah. So, like I said, this particular appropriation account was a bit topsy-turvy. I actually did it incorrectly the first time in my when I did a video for YouTube, and I had to go and redo the video. All right? And again, different people might interpret it differently. For example, some people might say, well, you have to add the retained profit from last year first, and then the calculations are based on that. I'm like, I didn't get that from this. But you see, it just says of profits. It doesn't say of current year's profits. It doesn't say of total available profits. It just says of profits, which could be taken to mean of the total available. All right. I didn't see it like that. Anyhow, right, folks, I think we're going to put a pin in it there for the day, for the week, and for the year. All right. So when we come back on the 6th of January, which is the first day of school, right, we're going to probably start with something very easy, the very tail end, which is the receipts and payments account, right? It's a very easy day because the first day back is normally a bit of a, what's the word, boy? Unpredictable day. So I don't want to do anything too significant. On the 8th, we will be starting manufacturing accounts. I should be able to teach the statement. I can't do it in one session. It only takes 2. And then we take a couple days on past papers after that. Thereafter, I'm thinking to hit budgets. But we could also possibly do ratios. Now, Carnival is on the 3rd and 4th of March. I don't know when your mock exams will be, but they probably will not start before Carnival, which means we have practically the whole of February to do revision for mock, and hopefully you will get a mock timetable before Carnival. I wouldn't be surprised if your mock will start on Ash Wednesday because there's due wickedness like that, right? So I don't know how March will turn out in terms of our sessions. I mean, I'll have sessions as per usual. We will be doing past paper questions as part of revision for mock, right? And anything else that we didn't tie up during the course of, well, prior to mock or during mock, we will tie up in the Easter break, which will be somewhere around here, right? Actually, let me just Google when Easter is very quickly. So when is Easter 2025? April 20th. Wow. I have to double check the start and end dates for the terms. I think I'm supposed to have it. So yeah, so April 20th. That, but I think some C6 subjects, hold on, I think I have the timetable. Timetable 2025. Why do I have 2025? I'm pretty sure I have it. Hold on. Syllabuses. Okay. They're not hard to find. So, CSEC, May, June 2020. Right, cool. Let's have one here. Let's have one here. More. So the 15th, let's zoom in here a little bit, shall we? Let's take off this. Yeah, so prior to Easter, well, art starting before that, that's Easter Thursday, right? And then there's a little space there, right? So, okay, all right. And then let's double check it to make sure May, June 2025. Yeah, so the same dates. Okay, and the 1st of May, and then thereafter, right, so English A and Spanish, on the same day? Make this timetable. And PoA is the Tuesday. All right, cool. All right. That's the paper 2. All right, where's the paper 1? Maths is the Friday. All right, so we have some space in between, because the next day after PoA is EDPM and TD, Religious, French, HSB. Right, so I don't know that many people doing clothing and textiles, EDP. I know some people do EDPM. I know some people doing French and TD, so of course, some people are going to miss certain sessions. But yeah, the maths is definitely going to be on Tuesday, Wednesday, and Thursday. All right, then most of my exam, the big one's done for me. A big one here, add maths on the following Thursday, I think. Yeah, okay. And then where they pack up, so paper 1 for PoA is on the 20th. That's a Tuesday. Well, the weekend we will do some multiple choice. And I think the math multiple choice is the last exam as per usual. Well, the new usual, yeah. Okay, so we'll have prep that day as well. Well, that week on the add maths is the Tuesday. Oh, okay. All right. Yeah. We could manage that. Yeah. So we have to get some specific dates regarding the start and end days for the terms, and hopefully mock exam timetable too. Anyhow, so guys, thanks for being here. I know it was a little bit of a pull to come out for 2 weeks, but we did it. All right. Like I said, we should be finished with that syllabus. If not before mock, just after. right? And we should be very well prepared for the exam, given we don't miss too many sessions. I do plan to, but again, things happen. Anyhow, guys, so enjoy the rest of the Christmas vacation. All the best for 2025 and hope to see you in the new year. All right, Google Meet. I'll go on there later. TikTok. I go on. Yo. Yeah, it's one of the longest exams. All right, enjoy. Later.